Hi there, Serial Trader here. I got a request for Ethereum Classic, or also the Ethereum Classic Grayscale Investment Trust. So let's have a look. Now, I've gone through a couple different charts. This is the ETCUSD Coinbase chart. And then I also have had a look there at the ETCUSD Bitfinex chart. So there's a couple differences to point out. And then I'll explain why I'm leaning more towards the Grayscale Investment Trust for Ethereum Classic to kind of analyze in more depth here. So, okay, so on the Bitfinex chart, we had this major low for December 2019, and that came into play at 3.4. Now on this most recent spike down, we went to 3.30. So for this to be a 1 up, 2 down on this chart, that's invalidated because we did more than 100% retracement. Now, obviously, we bounced quickly right off those levels, but we still technically invalidated on this chart, although we did not invalidate the December 2018 lows, which is at 3.3. We basically did, within a fraction of a point there, we did a double bottom to the December 2018 lows. So for this to be a 1-2, and then a larger 1-2, or I should say smaller 1-2 of, say, an extended third to come, this doesn't quite work on the Bitfinex chart because we did have that minor violation. So I just thought I'd point that out without putting a full labeling on here. I also want to look at the, again, ETCUSD Coinbase chart. So interesting, a little different. We had this big spike here on the Coinbase chart, which we did not have on the Bitfinex chart. So I'm going to kind of consider this just an outlier spike and try to ignore that. And this is more just the one up, 2 down, and then another 1-2 is still possible on this chart because you can see we have the December 2019 lows at 3.367, and this came into play at 3.5. So we've made a higher low, so technically still a 1-2 intact. So when you have a discrepancy between exchanges like this, in a perhaps somewhat illiquid market, if you have a rule violation on one but not the other, I think you got to let that slide. I mean, it's up to you, but that's how I'd be looking at it. So maybe the Coinbase one is the one to go off of. Maybe it's not. No, I haven't fully labeled this one either. So that brings me to my point here on ETCG. So the Grayscale Ethereum Classic Trust. And I actually like this chart more. It looks clear to me. And if I just zoom out here, it looks like we've just basically got a major bottom. Let's see here, was that the actual low? We had 7.25 and 6.81. Okay, so the actual low here is the basis for starting a wave count on this chart, and I like that. It's a little cleaner. Consider this all part of this very large correction from the 2019 highs there, June 2019 highs. Yeah, that works for me. So again, from the December 2018 lows, we can do a 1 long 2, and now another 1-2. So let's just use that as kind of our starting point here. Now, from on ETCG, the January 2020 lows, January 2nd, 2020. So basically right at the beginning of this year, I have a nice 1, 2, 3, 4, 5 up for possibly a larger wave 1. Looks like we got an A, B, C down for W. Then we got an A, B, C, D, E, triangle X. And now an A, B, C down for a wave Y of 2. And starting to reverse. And you can see we went as low, very deep retracement, of course. We went as low as $7 on this, and the actual key low to hold there was 681. So we have a potentially very nice 1-2 wave 3 to come kind of setup. And what I like about setups like this is, okay, it's so close to invalidating that you're not risking a whole lot to find out what's going to happen next, as opposed to what you'll make if you're correct in what happens next. So let's say we enter price, no, I want to do here long position. So let's just say we enter right here where we closed on Friday there. And we put our stop, hang on, just a moment there. Okay, so we put our stop just right at or right below the January 2nd, 2020 low. And make sure I got that right there. 681. Let me just get that to snap right on. Okay. Make the entry where we just closed on Friday. And then let's just do some targets. Okay, so we'll do our typical, let's do equality and also a 1618 target. Hang on. Equality and 1618. So let's just say we do an ABC up. Okay. Let's say we do that. And let's get these other wave labels all the way for now. If we just do an equality relationship, and that would basically be roughly a double top to where we were before, we got a 7.9 to 1 risk reward ratio. And if we actually, as far as the trade goes, and if we actually go up to, say, the 1618 in a third wave, which would be a modest third wave projection, it could certainly exceed if it's really going to be an explosive third wave, but let's just say 1618, and that'll get us up to 34 bucks and change. That'd be 13.28 to 1, roughly. So let's just call it 13 to 1 risk reward ratio. So I mean, as far as a trade setup goes, you don't have to put a huge position down to find out what's going to happen next. And if what happens next is this scenario, I mean, the amount you gain to what you risked is just going to be disproportionately in your favor. So that's certainly a trade setup. Of course, whenever you get this close to invalidating the pattern, obviously you risk getting stopped out more than, say, if you just are hovering around the 1618 or the 50% retracement. That's a little higher confidence if you've already started to reverse off that area. But one thing these extremely deep retracements do set up is a very favorable risk-reward ratio for a new position. So I think that's all I'm going to say about that. I mean, you can certainly take your pick between which ETCUSD chart you want to rely on as far as rule violations or not, but maybe throw those aside and just go off this ETCG. And this thing's looking real good. I mean, to me, this looks like a clear 5 up, 3 down. I like that you have a triangle in the middle interrupting this pattern. Kind of the little rule of the triangle is the triangle precedes the final move in a sequence. So if this entire sequence is a Y wave and this triangle X precede the final, or sorry, a second wave, and this triangle X precede the final move down in a Y wave, and we did make a higher low and now starting to reverse off of there, that's telling you it might be an extremely important pivot, and maybe you got a huge amount of upside with a tiny risk here. I like that for a trade setup, and I'll certainly be looking at that next week. Hopefully that was satisfactory analysis, and certainly anything else, just throw it in the comment section and I'll get back to you. All right, Serial Trader signing off.